$3,164. Did you know that that is the average mortgage payment on a $500,000 home today at a 7% interest rate with $100,000 down or 20% down? Ouch. That's a lot of money. And did you know that that's also for a single family home? No HOA fees, so not a condo. Well, believe it or not, it is still possible to buy a house with a 4% interest rate. So stay tuned, and I'm going to go through with you 3 ways that you can still get a 4% interest rate even in today's market. So the number one way to achieve a 4% interest rate in this particular market we're in is a rate buy down. Now you can achieve this in a couple of different ways. You're hearing a lot of talk about right now in the marketplace about a 3-2-1 buy down. And what that simply means is on year 1, you're buying the rate down 3%. Year 2, 2%. Year 1, 1%. And on year 4, you are at the same interest rate as the day you purchased the loan. So for example, in a 7% interest rate world, on year 1, you're paying a 4% interest rate. Year 2, 5. Year 3, 6. And year 4, you're at that 7%. The second way you can do that is to simply buy the rate down. And what does that mean? That means that you can simply say on that same $500,000 home, every 1% is about 4 points. And every point is about 1% of the total cost of the loan. So on a $500,000 home, 1 point is $5,000. So you could use $5,000 of your money, your down payment, to purchase the rate down 1/4%. These are both options. They're both great. And the question becomes, well, where does this money come from? Well, we like the theory of OPM, other people's money. So instead of potentially negotiating aggressively with that seller on purchase price, ask them for seller concessions and use that money to either buy it down through the 3-2-1 method or just buy it down in general. In essence, buy the house, date the rate. The second way that you can achieve a 4% interest rate in today's market is you can work with sellers that potentially have no mortgage on their home. Potentially they don't owe a bank, so they can in essence become the banker. So if you're working with a property that potentially has no mortgage on it, you could go to the seller, ask the seller to be your lender, and you could negotiate that interest rate directly with that seller. So in essence, he collects the interest that you pay on that loan over the course of time, and he can use that when he's factoring what his net as a seller is. So those are the top 2 ways that you can get that interest rate at 4%. Next, we're going to talk about the third way to achieve a 4% interest rate in today's market. The third way is called subject to financing. And this is one that almost nobody's ever heard of. But in essence, when there's a seller is willing to, you basically get the title of the property, but you assume or take over that mortgage payment and continue making those mortgage payments directly to the lender until you can refinance the home and get the home and the note all in your name. So there are 3 ways that you can achieve a 4% interest rate in today's market. And my name is Julie Paez. I help people just like you move in and move out of the Northwoods. And I would love to talk with you further about your overall goals in buying, selling, or investing in Northern Wisconsin. Have a great day.